Some of the well-established firms already have all these practices in place. Some of the well-established exchanges already have all these practices in place. But there are lots of people coming into the business that may or may not know where to start. I mean, we want people to go up the learning curve pretty quickly. Also, established firms, these things have gotten so complex. We thought it would be helpful to have a checklist out there where you just tick off the boxes and make sure you're doing everything you need to do to protect the market. I think what everybody worries about is market disruption. What if the automated trading algorithm doesn't do what it's supposed to do? What if we're not even aware that it's doing something that we don't know? What if it's having unintended consequences? Most of this paper is around taking steps to prevent the algorithm from behaving in a way that you didn't intend. We spent a lot of time, about a third of the paper, on pre-trade controls. Pre-trade are controls that are in place that take effect before the order actually makes it to the exchange. We do well-known controls such as order size limits or position limits. We also have some descriptions of dynamic price collars at the exchange, of market price validation checks to make sure the market data coming in is correct, self-match prevention, kill switches, things that would stop the order from going into the exchange under certain circumstances. We think that having dynamic price collars, particularly at the exchange level, is very important because that's really what helped the futures markets in the flash crash of May of 2020, is that the CME actually had some kind of reality check in place about the pricing so that it actually paused the market when things looked a little bit out of the whack. So we spent a lot of time on that. And a lot of the sophisticated analysis cannot take place in milliseconds or microseconds. So we look for real-time feeds from the exchange, drop copy feeds, that happen within milliseconds or seconds, and that can be used to analyze what's really going on across various exchanges, across various trading platforms, within trading platforms. We feel like the more intense analysis has to take place sort of behind the scenes. And then you can use some of the other pre-trade controls such as kill switches or pre-trade controls where you would change the limit to stop the trading if it looks like it's crazy. We were really careful not to be overly prescriptive on documentation, but again, we tried to develop a checklist of where it would be helpful for people to document such things as change management procedures, so that various software developers and traders know what processes should be followed when you're changing software and releasing it to the production market, so that the knowledge can be transferred easily from one person to another. BCPDR procedures, the regulators often require that. Security procedures, those kinds of things where you want to convey the knowledge to the organization. We were very careful not to actually say that all players should have this kind of documentation, though, because it really depends on how complex the organization is, how big the organization is, and how many asset classes they're trading. So it was really designed to be more of a checklist of what you could document as opposed to a recommendation on what needed to be documented. One of the ways we were different from the typical standards bodies is we did not adopt a prescriptive recommendation for how software should be developed. There's some people who use Agile, there's some people who use traditional methods. So we were very careful to, again, provide a checklist for the kinds of things that you should look at. How do you test your software? How do you release your software? How do you go back and change your software? Not, we think you should adopt Agile methods and here's how you instruct your Scrum Master to manage your project or things like that. We tried not to be too detailed. We've seen things out of Europe that are extremely prescriptive, wanting to identify algos, requiring registration of people who operate high-frequency trading systems. And so we want to make sure that the regulators are implementing things that aren't going to cause harm to the market and reduce liquidity. I think the CFTC has taken a little bit more deliberate approach in developing their rules, so we're hoping that something's going to come out that's going to be a little bit easier for us to implement that will not have any undesired side effects, if you will.